Hello viewers, in this video we'll be seeing the second chapter of accountancy where we'll be understanding some of the basic accounting terms. So let us start the video. The first basic accounting term which we have, that is the business transaction. It refers to the exchange of the goods and services only. That should be always in terms of money. That is why it is called as the financial event and which is expressed in terms of money, which brings a change in the financial position of an enterprise as well. So we can say it as the business transaction, like the sale of the goods and services, like the purchase of the goods, like when we are receiving the cash from our debtors. So this transaction may be a cash transaction even and can be a credit transaction. When this transaction will be called as cash transaction, when the amount is transacted means paid or received immediately on entering into a transaction, then it is called as the cash transaction. And when we are talking about the credit transaction, so when it is promised to pay later, then it will be termed as the credit transaction even. So let us check the another term which we have, that is called as capital. Now this capital term says what? This is only what the amount which is invested, the cash which is invested, like the goods which is invested, like the assets which are invested by the proprietor. Who is the proprietor? Who will show the interest of investing the amount, like investing the goods and assets. So the proprietor is only our owner who is going to start the business, who while starting the business or for continuing the business, while in commencing the business, he may invest the amount. So that is what here every time in the questions will be getting the commencement word. Commencement means only the starting. When we are starting the when the business is started by the proprietor, so that time the amount which is invested, that is called as the capital amount. Every time it will be treated as the internal liability for the business. Why it will be treated as the internal liability? Because of the business entity principle, which says business and businessmen are the two separate legal entities. That is why the amount which is invested by the owner, it will be treated as the internal liability. When we talk about the drawings are the another very important aspect which says as the proprietor has only a right to withdraw the amount, to withdraw the goods, to withdraw the assets which are invested by him only. So he may withdraw it as well. So why will he withdraw? For personal purpose, for private purpose, even it is also called as domestic or the household purpose. So these are the terms we used to get in the questions. So that's why these all synonyms I have used for mentioning the definition of drawings. So the amount which is withdrawn by the proprietor will be treated as drawings. Here comes the next topic, that is called as liability. The amount which is invested by the proprietor, as already we have discussed, will be treated as the internal liability always. Why it is treated as the internal liability? That is just because of the business entity principle. So that is what, when we talk about the liability, what it is. So the liability is only the amount which is owed. Owed means the payable. The amount which is payable by the business means business has to pay. So the external liability means the amount which has to be paid to the outsiders other than the owners. They are the external liability for the business. So here comes the parts of the liabilities, or we are classifying these all liabilities under the heading non-current liability and the current liability. When we say the non-current liability, the amount which has to be paid by the business after a year, or we can say more than a year, that is only the non-current liability. The example we can consider here, the long-term loans, the bank overdraft which has to be paid after 1 year, that will be treated as the non-current liability. When we talk about the current liability, they are the short-term loans, the amount which has to be paid within the 1 year, or we can say payable within 12 months. So that is only the current liability. So the examples are the creditors, the bills payable, like short-term loans and all. So here comes the asset, the another very important aspect. So when we talk about the asset, so the anything which is owned by the business, it is called as the asset. These all are the properties which is owned, like it can be even tangible, it can be even intangible, which is owned by any entity or any enterprise. So they are the economic resources of the business. That is why here the definition is used, that is what the anything which will enable the firm to get the economic benefits in the future, that is the asset. And even the assets are the valuable resources owned by a business which are acquired at a measurable money cost and which will with which money value will be attached. That is why here we are saying it as the money cost even. So let us see the parts of the asset first. The first part of the asset which we have, the current asset. So current assets are what? These are those assets which are held by any entity or any enterprise with the purpose of converting them into cash, that too within a short period, that is 1 year only. So the examples also we can consider like the goods which are purchased with the purpose to resell and to earn profit, even the stock like cash, like bank balance and all. So these all are the parts of the current assets only. These all are the examples of the current asset. So those assets which can either be converted to cash or used to pay the current liabilities within 12 months, that is only the current asset. Here comes the next part of the asset, that is the non-current asset. So when we talk about the non-current asset, it is there in the business which is held by the business or any entity or any enterprise not with the purpose to resell but are held as an investment or to facilitate the business operations even. So the assets are held for a longer duration, then it will be treated as the non-current asset only. So non-current asset, and the best example for non-current asset is only the fixed asset. So what do you mean by fixed asset? So the definition for fixed asset which we have, that is the example also we can say like building, like land and machinery and all. So these all will have the economic benefit for more than a year. So the fixed assets are held by the business for on the long-term basis, which can't be easily converted into cash. That will be the part of the fixed asset, and it will always it will increase the earning capacity of the business. After definition of the fixed asset, here comes the parts of the fixed asset. The first part of the fixed asset which we have, the tangible asset. When we talk about the tangible word, items which have the physical existence, which can be seen, which can be touched, that is only the tangible asset. So it is also one of the part of the fixed asset. The example we can consider here, the land and building and all, the cash and all. When we talk about the intangible assets, so these assets are what? The assets which do not have any physical existence, like the reputation which is earned by the business, which is also called as goodwill for the business, which is earned in the normal course of time. That is only the intangible asset, like computer software, like trademark and all, which we cannot see, which we cannot feel and touch. So that is what here it is the part of the intangible asset. Now, the third part of the asset which we have, that is the fictitious assets. When we talk about the fictitious assets, so these all assets are what? So these all assets are neither tangible nor intangible in nature. So they are the losses not written off in the accounting year in which they are incurred, but in more than one accounting period it will be there. Like the example which we can say, that is what the advertisement expenditure is the best example of the fictitious assets. Now, next part, the next basic accounting term, that is called as receipts. When we talk about the receipts, so the amount which is received or which will be received by the business in future, that is only the receivable amount after selling the goods, or which will provide the benefit to the business. So the revenue is the amount earned by a business owner after selling its products or the services. They are only the receipts. Here we are categorizing those receipts as the capital receipts and the revenue receipts. The first receipt which is categorized, that is what the revenue receipt. When we talk about the revenue receipt, the amount which is received or which is receivable in the normal course of the business, and that too sale of the goods or after rendering the services or the investment of the business. So these all will generate the income, and yes, it is recurring in nature. So these all are the revenue receipts. When we talk about the capital receipts, these all are non-recurring in nature. So that capital receipts are what? The capital receipts are received or receivable against a transaction which are not revenue in nature. That is only the non-recurring in nature, and which says the amount received or receivable, like example we can say machinery, building, furniture, etc. Every time it will not occur. That every time which will not occur, that receipts which is there, but yes, again and again business will not do such transaction. That is only the capital receipts. Here comes the expenditure. When we talk about the expenditure, it is only the spending. It is only what? The expenditure is the amount spent or even the liability incurred for acquiring the existing assets even, or which will increase the earning capacity of the business. That is only the expenditure. Here we are categorizing the expenditure as the revenue expenditure and the capital expenditure. As for the receipts also, we have seen the revenue term and the capital term. Revenue says what? It is recurring in nature, and capital says what? Non-recurring in nature. So for expenditure also we'll see the same. If the benefit of expenditure is less than a year, it is only the revenue expenditure, like expenditure which will occur again and again, like electricity expenses, like salaries, like rent which is paid, or the cost of the goods sold. So these all things which will occur again and again are the part of the revenue expenditure. And when we talk about the capital expenditure, it is what? It will not occur again. Like the example which we can say that like capital expenditure are the purchases of the machine or purchase of the furniture, like the assets which are purchased. So the assets which are purchased, every time business won't purchase the asset, every time business will purchase the goods which will be the part of the stock. That is why the expenditure, when we talk about the if the benefit of expenditure is more than one accounting year, that is only the capital expenditure, like furniture and all, the benefit will be there for more than a year. So here comes the examples of the revenue expenditure and the capital expenditure, like commission, like legal expenses, like insurance, which will occur again and again. That is the revenue expenditure. When we talk about the capital expenditure, computer equipments, like office equipments, like land and machinery, which will be there once in lifetime in the business. That's what here we can say, which will not occur again and again. It's the part of the capital expenditure. Here comes the last part of the expenditure, which is called as the deferred revenue expenditure. When we talk about the deferred revenue expenditure, it is what? It is just the part of the revenue expenditure only, and it is. But yes, it is also written off in more than one accounting period, and we have already seen the fictitious assets. And yes, the same definition of fictitious assets can be used for deferred revenue expenditure as well. So that is only what which will, like the advertisement expenditure example which we have seen already, once it is paid, so again and again these all benefit will be there for more than one accounting period, for more than one financial year. So that is only the deferred revenue expenditure. So they are the losses not written off in the accounting year or in the year in which they are incurred, like the advertisement expenditure. So that was it for the first video. For the parts, the further basic accounting terms will be there in the next part of the video. So that was it for this video. Thank you, children.